Hello everyone and welcome to this landmark webinar. Today we are going to be giving you a general introduction to anti-money laundering. We have done quite a few webinars in the past here at Landmark focusing on a range of topics from enhanced due diligence, politically exposed persons and most recently GDPR. So if you are interested in seeing any of those too, please just let us know, but we do have a webinar series on our YouTube channel. So today, as I said, we are going back to basics and giving a general introduction of anti-money laundering and what it actually means for you as an estate agent. We often get asked here, why do I as an agent have to do these checks when a solicitor checks or a mortgage advisor checks the client? The quote on the page here is taken from the regulatory guidance, and I have put the link here to the latest guidance. The National Crime Agency has released figures identifying the number of suspicious activity reports it has received from October 2015 to March 2017. Previously released figures showed just 355 suspicious activity reports, or commonly known as SARs, were submitted by estate agents against the backdrop of 1.2 million transactions. In response to greater scrutiny from HMRC, that figure has nearly doubled in the following 12 months and now represents 0.12% of all SARs submitted to the National Crime Agency. However, despite acknowledging that estate agents do not typically handle funds, in its guidance, HMRC is clear about why the sector is under scrutiny, and they say that they are a key facilitator in a property sale and come into contact with both parties to the transaction at an early stage, and so are in an ideal position to identify suspicious activity. If a person or business fails to comply with the regulations, they may face civil penalties or criminal prosecution. This could result in unlimited fines and/or a prison term of up to 2 years. The senior manager in the business has a number of responsibilities with regards to anti-money laundering, such as they must be writing your risk assessment and policies, appointing a Money Laundering Reporting Officer, ensure staff are trained on the MLR and they have the right knowledge, conduct ongoing monitoring and audits on the effectiveness of your policies, as well as demonstrate a risk-based approach and devote enough resources to this. You should also appoint a deputy to act in the absence of the nominated officer. With regards to this risk-based approach, you must have a written risk assessment. So bearing this in mind, you need to think about how you interact with your customers and the nature of your business relationships and the different levels of risk that your clients pose. HMRC do give some guidance on things to consider when writing up your risk assessment in the guidance. You also must have a policy statement that is communicated to all your staff that outlines how you tackle anti-money laundering and what your procedures are. Things to include, such as how you verify your clients, how you identify when someone is politically exposed, how you report suspicious activity reports, and how you keep a record of your checks and ongoing monitoring. You must complete a suspicious activity report if you deem any activity to be suspicious and submit this to the National Crime Agency. Larger businesses must also appoint a compliance officer who monitors the effectiveness of the controls. You must ensure your customer due diligence is complete prior to entering into a business relationship, and you must keep records of the checks for 5 years. So before you list the property, ideally. And HMRC will check the date on which the property is published against the date of your client verification. With regards to purchases, a CDD must be complete before contracts are exchanged. In reality, however, this needs to be as early as possible and can be done any time after an offer is informally accepted. You do not need to undertake retrospective checks on purchases prior to the changes on the 26th of June of last year. In terms of sellers, you need to identify all the legal owners and beneficial owners of a property before you can market the property. In terms of what you need to comply with the requirements when it comes to applying customer due diligence, there is a list here on the slide taken from the regulations. I suspect it includes some of your own current activity. So you must, for example, Verify that an individual selling a property is legally entitled to do so. Refuse to deal with persons or entities if you cannot verify their legitimacy. Keep and maintain copies of customer due diligence. So, for the vast majority of people you deal with, it is enough to demonstrate you have acted in this way. However, a very important point is almost buried in here, and HMRC are very hot on this. You must apply enhanced due diligence to take account of the greater potential for money laundering in higher risk cases, including when the customer is not physically present when being identified and in respect of politically exposed persons. Where you are identifying higher risk clients, you need to undertake an evidence that you have applied a greater level of check on them, and this is known as enhanced due diligence. Applying EDD will be dictated by your own risk assessments, policies, and procedures, but HMRC have provided some pointers about indicative behaviours of those we might consider to be high risk. On the slide here, they also give examples on what you could do to apply enhanced due diligence. It should be said both the lists they give here are not exhaustive, so again, you need to think about your customer base and how you interact with your customers and what risks can be posed. Staff should be trained on identifying potential high-risk scenarios in order to be able to make a decision on whether to apply enhanced due diligence or not. And you need to demonstrate that extra level of verifying the client to satisfy enhanced due diligence. Identifying and verifying politically exposed persons is one of the biggest challenges facing estate agents as a result of these changes. Without any definitive list, this is tricky at best, and unless your enhanced due diligence identifies otherwise, you can enter into a business relationship where a PEP is involved, provided you undertake EDD and obtain senior management approval to do so. HMRC's guidance does outline who we can consider to be a politically exposed person, so for example a member of parliament or members of a governing body or political parties, Supreme Court judges or ambassadors, and high-ranking officials in the army. It also includes family members such as a spouse, partner, children and their spouse or partner, brothers, sisters and parents, and known close associates. Before going on to define what close associates are, the detail of this is available in the guidance from HMRC. HMRC have acknowledged that UK PEPs will present much less of a risk from a money laundering point of view than foreign PEPs, and in such cases, although an EDD must be applied, a reduced level can be applied. You must also have a process in place for identifying individuals on the government's financial sanctions list and ensure that no instructions are taken from people on this list. Electronic checks modernise your AML procedures and tick a number of the boxes within the regulations when it comes to applying customer due diligence, all in under a minute. If we refer back to the guidance from HMRC on what you must do in order to carry out customer due diligence, electronic checks will enable you to both complete and document customer due diligence on all customers and beneficial owners before entering into a business relationship or occasional transaction, due diligence on the other party to the property sale, a procedure to identify those who cannot produce standard documents, a system for keeping copies of customer due diligence and supporting records and to keep the information up to date. They help you to verify paper documents when taking these from customers either as originals, or if you use the selfie method, you can also verify the ID is real using the AML checks. The selfie method is where you get the client to send you a photo of themselves holding their ID so you can compare for likeness. Now, this alone would not be compliant, but verifying the ID with an AML check would be. Using electronic data is more thorough than using paper methodologies, as clients invariably have different levels of information they can provide. Some may or may not have passports or driving licenses. Electronic checks provide an interpreted pass or refer result using the data available and identifies those on sanctions lists and PEPs. In a world that is more paperless by the day, requesting paper copies of ID from clients presents a growing challenge. Instead of requesting paper ID from purchasers and potentially slowing the transaction, how much more positive an experience are you providing your client with electronic checks? Instead of valuers chasing photo ID or paper documents, what if that time could be used to chase new leads and valuations? What impact could this potentially have on your business? Here is a short demonstration of how to run a money laundering check using our system. As you watch this, have a think about this. How often are we guilty of historically taking a passport, driving license, or utility bill without really doing any further due diligence? What does it actually tell us? By using our system, you can evidence your risk assessment by adjusting the level of check to normal or high risk. You need to collect a full name and date of birth, and you'll also need 12 months of addresses as a minimum. When we're applying enhanced due diligence, we can add the passport, driving license, national insurance number, and I quote again from the guidance, take additional measures to verify the original documents supplied. Here we can see an example of the results and what they look like. They are stored on the system so you can always retrieve them, which saves you having paper-based files. A past result is determined by the number of primary checks made and the particular level of risk associated with the client. The amount of electronic proof required to verify a person for anti-money laundering purposes differs depending on the perceived level of risk, either normal or high. We do provide free training and ongoing support with a dedicated account manager, and we don't just leave you high and dry when running the checks. If you would like to know more about our electronic AML checks, my details are on the screen here. So if you are based in the north, please contact me on sam.peacock@landmark.co.uk. Or if you are based in the south, you can contact my colleague Simon here at simon.burley@landmark.co.uk. Thank you for listening today, and please don't hesitate to get in touch if you have any other questions.